Talk a little bit about the mood of the markets. Karl Schamotta joining us here in studio. He's chief market strategist at Corpay. Happy U.S. midterm elections day to you, my friend. Just in terms of what the market's mood is right now, watching this storyline, how much attention is focused on these midterms?
I think to some extent this is seen as a bullish phenomena, right? The idea that you're going into a Congress or a political system that's in stasis, that's in gridlock, that's considered very, very good for markets and for predictability and for stability in the next little while. One sort of interesting caveat on that right now is of course the fact that Republicans are going to be in the opposition. They're going to control sort of the levers of power in opposition to the executive branch. That historically has been relatively positive for equity markets, and currency markets do tend to follow equity markets these days. So you're seeing a broader sort of I guess upturn in risk sentiment right now.
Well, I mean, the historical data is quite overwhelming, and we're going to talk about it later in the program, but you go back to 1942, and 6 months after the midterms, in every cycle, the S&P 500 is higher. Sometimes it's not by much, but that's quite a precedent, and it's hard to ignore, but it's also hard to ignore where we are right now globally, which is just a complete economic uncertainty story.
And you know what? I think that's a huge point. So many investors do, and if you look at sort of the media narrative out there, many investors tend to focus on those averages, right? We tend to look at that historical pattern and we put a lot of trust in it. And the problem this time around is this could mean that the U.S. government is unable to deploy anything like counter-cyclical fiscal policy if we go into a downturn. Right. So if we do see the economy slow pretty dramatically, we are not going to have the safety net that we had historically. We're going to have Congress, sort of arguing that we shouldn't spend more money and the overall political system running scared on the inflation issue. Right. So even if we see inflation roll over, even if we, see the economy slump pretty dramatically here, the government is not coming to the rescue. And so I would sort of suggest that this time could be a little bit different in terms of the longer term implications, especially for risk more broadly.
Well, that's an excellent point, because obviously there's a big concern with any fresh spending right now on the inflationary front. But you go back to the financial crisis. I remember being on the floor of the New York Stock Exchange, and people were like, "Let's see if Congress can get something done and put money into the system." Does that then put even more pressure back on the central banks, who seem to be in the spotlight every day right now?
Absolutely, except for, of course, they can't do anything. They're very clearly articulating that they've learned the lessons from the 70s. They've internalized that idea that they cannot, stop the tightening until inflation is truly and comprehensively dead. So, yeah, we might see a scene very similar to 2008. I'm sure you remember watching Jim Cramer sort of break down on air, calling for more stimulus. We could see something very similar if we do go into a downturn here.
Well, we could pull up a number of Jim Cramer moments for sure. But he's on a rival network, so we won't talk about him. I do want to talk about the U.S. dollar, because obviously it has been strong all year in the face of this uncertainty, and arguably it has been one of the strongest forces in the market. At this point in the year, what is your general sense? You talked about some of those correlations in various markets, but is that a trade that breaks at any point soon? Certainly anyone who's been watching that weak Canadian dollar is well aware of what's been happening with the greenback.
That's right. I think there is a pivot coming here. I think over the last week, we started to see this. First, we started to see markets becoming more confident about the ultimate terminal rate that we're going to see in the U.S., right? The idea that we're going to see rates lift to 5.25% to 5.5%, that is now priced into markets. There doesn't look like there's going to be a lot of delta past that point. Like, it doesn't look like, Powell's going to come out and somehow anchor that up even further. We know that China is beginning to consider relaxing some of its COVID-0 requirements. That provides sort of, demand stimulus. And we also know that things are brightening elsewhere in the global economy. The euro area is getting, to terms with the energy price shock that hit earlier this year. All of this suggests that there might be a resurgence in demand for some of these other currencies. And, to put a point on that, speculative demand is beginning to shift. So if you look at last week's Commitment of Traders report, you did see long positions on the dollar being pulled back, short positions on the euro and the pound beginning to retrace a bit. And of course, the Canadian dollar has rallied a little bit in line with that.
Just before I let you go, a word on volatility. I think the stat that I saw from Bloomberg this week was we've already seen more monthly swings in the stock market of, let's say, 7% in either direction since not just the financial crisis, but I think the Great Depression.
Right.
We've got inflation data in the United States in a couple of days. So here we are talking about maybe the midterms fueling the stock market rally. Would you be surprised if that all of a sudden changes based on the inflation print later this week?
100%. The biggest risk this week is unquestionably Thursday's inflation print, right? What we're going to see tonight is largely priced in. And we know that it's going to kind of come in over a period of days, right? So markets are prepared for that Republican sweep. We are not prepared for potentially an increase in inflation. If we see that inflation print above 8%, you could see a very big retracement in markets, a pretty profound sell-off, and those terminal rate expectations that I was just discussing going up even further. So, definitely stay frosty going into Thursday.
Yeah. Stay tuned.